Okay, this is revision last minute. Last minute revision for theory and a few points. Okay, uh, see, a non-profit organization or not-for-profit organization are formed for service or for the welfare of the society, whichever ways, however the question is asked, it can come in MCQs, fill in the blanks, or true or false. So it is formed for service and welfare of the society. Agreement between partners can be written or oral. It can be both. It can be any of it. A hidden goodwill is something, when a partner brings more than what is required, that amount is called hidden goodwill. NPSR is new profit sharing ratio, OR is old ratio, GR gain ratio, SR sacrifice ratio, DRR is debenture redemption ratio, reserve, EPS is earning per share, ROI is return on investment, PBT is profit before tax, PAT is profit after tax. ICAI is Institute of Chartered Accountants of India. Gain ratio formula is new ratio minus old ratio. Sacrifice ratio is old minus new ratio. Okay, who's an executor? Executor is a legal representative of the deceased partner. Okay, company is dash person, company is an artificial person. Again, they can ask feature of a company. A company will have a common seal, it is an artificial person, perpetual succession, limited liability. You can write any of the features. Then features of partnership, if they ask, you will write it is formed by two or more people. Then it is formed with an agreement. Profit and loss should be shared, and the business is started for a legal purpose. It does legal business. Okay, then they can ask what are the contents of partnership deed. Okay, partnership deed is a written agreement which will contain all the details, all the conditions, or of the partnership, the rules and regulations which they have to follow. Now, contents of partnership deed, it will have name and address of the partners, name and address of the firm, the profit sharing ratio, the rate of interest on capital, drawings, all that will be mentioned in it. Now, example of current ratio they can ask. Current ratio example is cash, inventory. You can write anything. You can write trade receivables, debt. Trade receivables is nothing but debtors plus bills receivable. When they ask you example of non-current ratio, you can write building, machinery, furniture and all. Okay, intangible asset if they ask. Example of intangible asset will be goodwill, patents, copyrights. You can write any of it. Current liabilities example, bank overdraft, trade payables, bank loan. Trade payables is nothing but creditors plus bills payable. Non-current liabilities example, your debentures, long-term borrowings, long-term loans, which can be paid after 12 months becomes your non-current liabilities. Intangible assets, goodwill, patent. Now, types of maintaining capital account, two methods, that is fixed capital method and fluctuating capital method. When they ask types of reserve, you can write any of them. Okay, statutory reserve, capital reserve, general reserve. Okay, tools or techniques of financial statement analysis, comparative statement, common size, ratio analysis, cash flow statement. Now, comparative is also called as horizontal analysis. Common size is called vertical analysis. They can ask like true or false. Is common size called a vertical analysis? It can be asked like that. Okay, then what is cash flow? Inflows and outflows of cash in a business is called cash flows. Share can be forfeited for non-payment of call money. Then methods of calculating goodwill. Okay, average profit method, super profit method, capitalization method. Now, debenture cannot be redeemed at discount and it cannot be redeemed out of provisions. Okay, firm can be dissolved, or the condition or circumstances under which a firm can be dissolved are: one, with the consent of all the partners or voluntary dissolution; then by the court's intervention. That is, when the partnership firm carries on with illegal business, then court can intervene and ask them to dissolve. Realization account. What is realization account? It is an account prepared to close all the assets and liabilities and to find the profit on realization, that is to realize all the assets and make payment to the liabilities. Now, what is oversubscription? And you can also mention it is prepared at the time of dissolution. Now, what is oversubscription? When the public subscribes for more than what is offered by the company. That is, when the company receives more applications than the number of shares offered to the public is called oversubscription. For example, if the company offers 10,000 shares, it is issuing 10,000 shares, but applications received are 12,000. So there is oversubscription of 2,000. Now, what is undersubscription? When company receives less number of applications than what is offered. That is, when the public subscribe less than what is offered. For example, if I offer 10,000 shares, if I'm issuing 10,000 shares, public is subscribing only 8,000. That is called undersubscription. Now, what is financial statement? Financial statement are basic and formal annual reports which are prepared by the management to analyze the financial conditions. And then there are the financial statements can be balance sheet, statement of profit and loss, cash flow statement, etc. Now, objectives of financial statements, it provides it is basically prepared to provide information about the economic resources, that is assets, and obligations, that is liabilities. Then it also provides information about the earning capacity of the business. It also provides information about the cash flows in the business. Issued capital is a part of authorized capital. I've told you that the order of it. The first one is authorized capital, then you have issued capital, subscribed capital, then you have called up capital, then paid up capital. Okay, authorized, for example, authorized is also called as registered capital. This is a maximum amount which I can raise. For example, if I can raise 10, this is the permitted amount by the registrar of companies which I can raise from the public. So this is the permitted amount, 1 lakh, which is called authorized capital. From this, I might issue only 80,000. So what I offer to public is called issued capital. So issued capital is a part of authorized capital. What is subscribed capital? Subscribed capital is a part of issued capital which is subscribed by the public. For example, I am offering say 80,000. If the company, if the public subscribes only 60, that is subscribed capital. In this 60, I might not require the entire amount. So I might make calls and take the amount from them. So when I call 50,000 from it, then that becomes called up capital. So in that 50,000, if the public is paying me 40,000, that is called paid up capital. So they can ask any of it. They can ask paid up capital is a part of called up capital. Called up capital is a part of subscribed. Subscribed is a part of issued. Issued is a part of authorized capital. Yeah, then activities according to accounting standard 3 for cash flows, cash flow in a business. So there are 3 activities basically: investing activities, operating activities, financing activities. Investing activities are, when you invest money on something, like example, they can ask purchase of machinery, building. Operating activities are activities which are carried for the day-to-day business, example, salary paid, wages paid. Then financing activities, through which you raise finance, that is cash received from issue of debentures. Example, they can ask any of the example, and also they can ask mention the activities. Okay. Then what is fixed capital? There are 2 methods of maintaining capital account: fixed capital method and fluctuating. Now, fixed capital method is capital remains fixed. Okay, year after year, the capital will remain fixed until and unless additional capital and drawing is made. Okay, and it is all the accounts are maintained. There are 2 accounts maintained in fixed capital system. Okay, that is capital account and current account. In fluctuating capital account, capital fluctuates or changes. So you can prepare everything in one account called capital account. Now, calls in arrears is when shareholders fail to pay the amount on allotment and calls made. It is called calls in arrears. You can give an example also. Then categories of share capital: authorized capital, issued capital, subscribed capital. Any 2 you can write. Types of shares means equity shares, preference shares. Now, what is capital fund? Capital fund is related to a non-profit organization where you balance the assets and liabilities. The difference is called capital fund. Now, the surplus of income and expenditure is added to capital fund. A reconstitution of partnership means admission, retirement, change in profit sharing ratio. Fixed capital means when will fixed capital change? When you bring additional capital is brought in or when the drawings are made. Rights acquired by a new partner. What are the rights acquired? That is, the new partner will acquire the right over the asset of the firm and also right on profit of the firm. Okay, now what are legacies? Legacies are amount received as per the will of the deceased person. So when a person dies, he writes in his will and he gives the money to the non-profit organization. Those are called legacies. Donations for specific purpose is always capitalized. Minimum number of partners is 2. When company buys its own share, it is called buyback of shares. Now, reasons for admitting a new partner: 1, when the company needs additional capital;